The following presentation is intended for financial advisors only. This event may include statements that contain forward-looking information, and such statements may be subject to risks and uncertainties, some of which are significant in scope and by their nature beyond the controls of the investment advisor. There can be no assurance that such information will prove to be accurate, and historical results are not necessarily indicative of future performance.
Greetings, I'm Mike Hurley, Chief Market Strategist for NexPoint, and welcome to our Market Minute for Monday, May 3rd, 2021. Well, important this week were the same four things that were important last week. The 4 C's of copper, corn, cargo, and China. Normally we rotate our slides, but the trends are so powerful and so important that I really wanted to talk about them again. Looking at the top left chart of copper, you can see that Dr. Copper, as we have mentioned, is scoring a new 10-year high. This is important because it's real growth and real demand for raw materials that pushes copper higher. Looking at corn, corn was up another 10% last week off the heels of its 12% gain the week before. These are big gains, and it's not often you see back-to-back double-digit gains in a commodity. So while the Federal Reserve is claiming 1 to 2% inflation targets, if you look at corn and copper, you can see 100% gains over the last 12 months. Again, isolated examples, but a very good reason and why we think the conversation will soon be moving from reflation to inflation. Moving clockwise down to cargo, you can see the Dow transports were up for a 13th straight week. Again, important strength longer term, but a chart that certainly looks like it could pull back here. And finally, speaking of pullbacks, the bottom left chart is of China. China led the global market recovery last year and has just recently had a mild pullback, garden variety pullback to its 200-day average. While it looks like a garden variety pullback, that's 20% of what some people would call a bear market. But again, the chart is healthy, intact, and as long as this 200-day average holds, that would be an important viable dip in the market. So stepping back and looking at the big picture, commodities continue to be in a strong uptrend and confirm the reflation trade and that there is global economic growth out there and activity. In your treasury, following the inflationary signals, is also strong and pulled back and held 150 last week. Looking at the U.S. markets, though, I've included 2 charts this week. The left is the S&P 500 with the advanced decline line and the number of new 52-week highs, and you can see that bull market in stocks is clearly being confirmed. Looking at the NASDAQ, however, though, you're seeing a similar picture, but not quite as strong. The NASDAQ has not quite pressed to a new all-time high yet. You're seeing the advanced decline line, or the number of stocks going up, diverging slightly, and certainly a divergence in the number of stocks scoring a new 52-week high. While this condition could rectify itself, and you could see the NASDAQ surge to a new all-time high and confirm the S&P, it's also a potential setup for a consolidation, or again, a healthy pullback that really pauses and refreshes. Because of that, and because we're exiting the best 6 months of the year, a lot of you have heard of sell in May and go away, and we're entering a tough part of the calendar for the market. We've moved our short-term arrow on the market to a flat line, showing that the market could see, and again, an extended pullback in this area. So I'm Mike Hurley. This has been our Market Minute for Monday, May 3rd. I hope to see you again next week.